Friendly reminder, the macro distribution call to 19 on GME and 2 on AMC was called back in June. Before the news of the warrants was even released to the public in September. So how did I know October 3rd was the date 5 months in advance? Better strap in, ladies and gentlemen, because everything I'm about to tell you about the GME warrants is going to confirm that everything that I have been saying about BlackRock having a repeating algorithm that is tethered to the S&P, driven by AMC and GME and their systemic risk, has been spot on for the last 3 years. In turn, I will also analyze all the near-term and mid-term price action expected on both AMC and GameStop as the warrants come into effect on October 7th. As you guys know, and has been the topic of discussion in the entire meme community since September 9th, has been GameStop's new special dividend, which is going to be in the form of a warrant delivered to any shareholder of the common stock up to October 3rd. You have to own common stock of GameStop in order to be eligible for this free warrant that is going to be distributed on October 7th. Now, on October 7th, when you look at GameStop, there will be one ticker called GME and another ticker called GMEWS. Those new warrants are going to derive from GameStop's existing shareholder price. It might pull 10% from GME Common. It might pull 20% from GME Common. For example, let's say that GME is currently trading at $27 and the warrants come out at $7. You will see a 20% drop on GameStop overnight because of the mechanics of how the warrants derive their price from the GME Common. Now, this may sound familiar to what AMC and Adam Aron did with APE and the preferred equity unit, but it is completely different for these main two reasons, okay? When APE was issued, Adam Aron basically force diluted AMC's stock as much as humanly possible using the APE preferred equity unit, which had voter rights. But where he got you was APE was not a dividend. Short sellers of AMC did not have any requirement to deliver APE to AMC common shareholders. So while he was forced diluting, at the same time, shorts could pile on to APE endlessly, which they did, and drop the stock 99% with no repercussions to what happened to AMC afterwards. And then once they combined APE back into AMC, all that excess of billions of dollars of seemingly infinite dilution that had no cap was all thrown back into the common stock, dropping the stock even further down to 99.4%. It was a complete hatchet job. Now, with GameStop, it's different because the warrant is a actual dividend. Short sellers actually have to deliver that warrant if they are borrowing to short GameStop. I will get into that in a second, but let's go over what the warrant entails in full first. As being an owner of GME common stock, whether you are retail or an institution of any various kind, okay, there's going to be 59 million warrants total, which will be able to be exercised at a strike price of $32. Think of it almost as like a call option with a strike of 32. So it doesn't matter at what period in time you choose to exercise your GME warrants. If you are a holder of common stock, it could be tomorrow, it could be on October 7th, or it could be on next year on October 1st. As long as you exercise your warrants before the October 30th, 2026 end date, GameStop will raise up to $1.9 billion in cash, adding to Ryan Cohen's absolute war chest of cash that is going to be rivaling Nvidia's balance sheet at $11 billion. Now, the mechanics here are what truly matters, because if there's 59 million warrants and you get 1 share per warrant, that means there's 59 million shares of new buying demand that's going to hit the tape. That's also 59 million shares of excess dilution. Now, with what happened at APE and the preferred equity unit, that wasn't 59 million shares. That was billions of shares of dilution. GameStop's float is already big enough that it's not going to have that big of an impact. What it is going to do is put shorts in a very, very difficult predicament. And this is where things start to get really juicy. In securities practice, if you are a firm and you short a stock, you don't own that short. You are borrowing a real share from a lender. It doesn't matter who it is, asset manager, hedge fund, bank, whatever. They have a fixed lending pool that's hidden behind the NYSE that they pull from all the time. And this has raised the questions about naked shorts consistently, because seemingly there has been more short interest in shares than actual shares outstanding in the float. Being an institution that has to borrow a real share also means you have to deliver any type of corporate action to the lender of that share. So the lender is never exposed. The lender is going to receive multiple things. One is a fixed income interest payment on the short that they're lending you, and the other is any cash dividend or warrant, etc., any corporate action that is on the common stock. You as a short seller have to deliver to the lender. This is going to cause a massive problem when 59 million warrants hit and every single GME owner is demanding warrants because they rightfully own the stock before October 3rd. So currently, as of September, GameStop's short interest is something around 90 million shares. But if 59 million new shares are issued and there is a short interest of 90 million, that's excess supply of shorts that the demand of 59 million cannot meet. So what is going to happen to that excess 40 or 50 million of shorts that are going to have to deliver warrants to their lenders that own GME common stock is that they are going to be forced to buy GME Warrant, GMEWS ticker, in the open market on October 7th, causing a short squeeze on the warrants. Now, you may be asking, Nick, if a short squeeze is happening on the warrant ticker, GMEWS, how does that affect GME common stock? It does directly because of the arbitrage happening between the two tickers. If the warrant ticker gets too overvalued, say it goes from $7 to $20, hedge funds are going to be shorting the warrant, but they're also going to be bidding up and buying GME common to arb the prices to a more fair valuation in the stock market, which is going to cause basically a feedback loop. Because if GME common starts rising, then that means shorts have to exit further, because the closer you get to that 32 strike price, the more warrants are going to be exercised at a discount. Say GME goes to $40 and the warrants are at 32. Okay, that means you have the eligibility to buy GameStop at 32, which is an $8 discount. It's going to incentivize shorts, basically forcing them to cover their positions on GME common, which is going to send up GME even further in this feedback loop continuously until you reach that $50 target towards the end of next year. What is incredible about this moment in time is there is a basically 4-day gap in between October 3rd and October 7th. And while it is over the weekend, it still matters because there is a giant liquidity gap. The market is always forward looking. It's always pricing in the future of what is going to be happening as these warrants, dividends, cash, as these news events come in. So if there is a gap in between the time where the value of the warrants, which is derived from GME common, doesn't even exist, what do you think firms are going to do for the next 4 days? They're going to short GME common. Why wouldn't you? So you are looking right now at two major reasons why GameStop is going to drop in the next 4 days down to my $19-20 level in demand zone. And that is because, one, there's a liquidity gap and hedge funds are shorting GameStop until the warrants hit the NYSE and actually bring that value back to GME as a company as a whole. And two, hedge funds in general, this is standard operating procedures. Anytime you see an arbitrage opportunity in the market where there's a window of weakness like this, you take advantage of it. You don't sit on the sidelines. That's free money. If they can take GameStop from $27 to $20 and make a guaranteed 20% in 4 days, why wouldn't you do that? So coming full circle now, okay, you have 59 million shares that leading all the way into October 30th, 2026 are going to hit the tape for GameStop, okay? That's 59 million shares of dilution, and that's 59 million shares that short sellers have to deliver warrants to for the lenders that they are borrowing the stock in order to short it. The key here is that there is an extra 40 million shares that are currently shorted by shorts that are going to have to pay for that warrant in the open market because there is only 59 million warrants that are going to be basically delivered to lenders for free. They are going to have to come up with those extra 40 million in buys, and that is going to directly hit the warrant ticker, which is going to bleed into GME common, which is going to cause both securities to squeeze for the month of October, starting on the October 7th issue date. Now, let's take a minute to go over GameStop and AMC's chart, which have the exact same charts. There is no difference. We're going to talk about the micro and macro fractals. We're going to talk about the POIs. We're going to talk about near and midterm price action so you guys know exactly how to navigate the warrants moving forward since we're expecting a move after October 7th. You are currently looking at your entire super macro structure on GameStop. Do not overcomplicate it and keep it as basic TA as humanly possible. The most selling volume that GameStop is experiencing is right here, okay? That is your super macro supply extended all the way back to here to your run on May 2024. This is super macro supply resistance, okay? This is why I said all the way back in July that GME would snub 26 and it would not break this liquid zone. It needs more demand liquidity in order to break through on what is going to be the 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10th tap of the same exact zone. It's not enough buying demand yet. It still needs to refuel. Using the warrants as an excuse is going to be the way that they come across and do that. Once you tap new demand off of the warrants and off of any bad news that happens with SPY over the next 48 hours, okay? That is your macro bottom. The issue date is going to be October 7th. That is basically when the squeeze begins. So as long as you load GameStop and AMC at GameStop around $20, $19, and AMC around that low twos, 230, 215, whatever it's going to end up being, you squeeze after on the micro, not the macro. The difference between a micro and macro squeeze is percentage based. On a micro, you can get anywhere from 7 to 50%, and that's exactly what we're expecting here. Your macro POI, which is October 3rd, plays inverse to the downside, and then you hit your micro POI to the upside, leading into FOMC on October 29th. An AMC chart is no different. It's the exact same sequence with the exact same fractal and the exact same timing. But the narrative reason is going to have to be something different than what GameStop's is, okay? I don't know what it's going to be, but Adam Aron has a horrendous way of timing his dilutions and bad news with the fractals that match up to the exact sequences on the S&P. That's how you know he works for BlackRock. Listen, I have been on this journey equally as long as you, okay? I have lost more money than all of you have. I have been in more debt than most likely all of you have. I am here to help you beat BlackRock's repeating algorithm, and that is it. There's going to be a time where I can no longer do this. You need to take full advantage of me while you still can, because it may only be a couple more months until you never see me again on Twitter doing any type of technical analysis, because I'll be registered with the SEC and won't be able to. This is your time to capitalize. Get it done. If you have any questions, hit me in the chat. If you want to join Yield Boss, DM me immediately. You will know all these things 6 months in advance. Twitter, YouTube, TikTok, Instagram is always going to get it later than the paid members of the Yield Boss Discord. All right? I love you very much. Have a great weekend and be prepared to buy the fucking shit out of this bottom.